The AI market is exploding, yet most investors overlook stocks under $1 quietly powering critical AI systems. One trades at just 30 cents, another at 42 cents, each solving bottlenecks even major AI players rely on. These aren't giants like Nvidia, they're hidden engines of AI expansion. One has tech in active use, yet its market cap is tiny. The other? Even cheaper, operating in a niche few know exists. By the end of this video, you'll see why these sub-$1 stocks could ride the AI wave in ways most investors miss. Let's start with the first stock, trading at just 30 cents. While I can't reveal its name yet, it is involved in AI systems that focus on real-time data processing. The company's technology is embedded in AI pipelines, enabling faster decision-making and more efficient workflows. This is not some abstract AI concept. It's deployed today in environments where latency and bandwidth matter. Could a stock at just 30 cents really be a critical part of a multi-billion-dollar AI bottleneck? Most investors would be shocked to learn how fundamental this technology is to operations at much larger AI companies. And while this first stock is scaling, there's a second one quietly addressing a different problem that even major AI players depend on. Industry adoption is the key to understanding why these companies matter. The first stock operates in a space where a handful of competitors exist, yet its solution is unique enough that it's already gaining traction with small to medium AI enterprises. Its revenue last quarter was a tiny fraction of what Nvidia or Intel generates, yet the efficiency gains its systems provide are comparable in scale and importance. Supply chain relevance is also crucial here. The company works with specialized hardware that few others touch, giving it an early mover advantage. And as AI adoption increases globally, the need for its technology is projected to grow at an accelerated rate. Looking at the business model and traction, this company has secured partnerships with a handful of AI service providers and niche clients that rely on real-time data processing. These partnerships aren't just nominal. They often involve long-term contracts and integration support, cementing the company's role in the ecosystem. Few retail investors even know this exists, which is why the stock remains under the radar despite its critical role. Now it's time to reveal the first stock. The company is iVeda Solutions Inc., ticker IVDA, currently trading at 30 cents. For a stock playing such an essential role in AI pipelines, its valuation remains surprisingly low. The combination of real-world adoption, embedded technology, and small market cap creates a valuation asymmetry that's hard to ignore. Investors who understand the space are starting to notice, but the broader retail market has barely caught on. Even after revealing the first stock, the valuation story doesn't end. Despite the low price, the company has multiple overlooked catalysts. Growth in AI data requirements, expanding adoption in small to medium AI enterprises, and its niche hardware integrations all point toward upside potential that isn't priced in yet. This is why the stock remains a compelling consideration for investors looking under the $1 mark. Now let's move on to the second stock, which is equally intriguing but operates in a slightly different segment of AI infrastructure. I won't reveal its name yet, but this company focuses on intelligent monitoring and automation systems that are essential to AI operations in real-world settings. When we compare both stocks in a few minutes, one has a more aggressive deployment strategy, but the other's efficiency and niche positioning make it just as compelling. Trading at 42 cents, this second stock is involved in hardware and software combinations that improve AI performance in environments where speed and reliability are critical. Its adoption is growing steadily, and its technology is quietly embedded in AI operations that few outside the industry pay attention to. Why is no one talking about a 42-cent stock that is quietly transforming operational AI workflows? Part of the answer lies in its low market cap and the fact that it operates in a niche segment that doesn't get headlines, but its impact on AI efficiency is significant. Industry traction is equally important here. The company has partnerships with specialized AI integrators, and its systems are being used in data pipelines and monitoring environments that require real-time feedback. Forward-looking, if AI demand doubles over the next year or two, the dynamics between this stock and the first one could shift dramatically, especially in sectors that require high-speed AI operations. The second stock is Ares Technology Inc., ticker ART, currently trading at 42 cents. Even after revealing its name, it remains undervalued relative to its real-world impact. While its adoption is slightly slower than the first stock in some areas, its systems are designed for scalability, meaning that as demand for AI increases, the company could see rapid integration across new clients. This combination of current deployment and future potential makes it a stock worth watching closely. Valuation here is also compelling. Despite the low share price, the company has unique catalysts, including specialized AI monitoring solutions and a growing footprint in niche AI hardware integration. These overlooked factors suggest potential upside that many investors may not yet appreciate, especially when considering the broader AI expansion narrative. Finally, let's compare the two. Stock 1, IVDA, is cheaper now at 30 cents, and its adoption is steady but deliberate, focusing on reliability and embedded efficiency. Stock 2, ART, at 42 cents, is slightly more expensive but offers rapid scalability and a niche that could see explosive adoption if AI data demands increase. When considering risk versus potential, IVDA is a lower-cost entry with solid fundamentals, while ART is positioned for faster expansion but carries slightly more risk. Both have strengths that align differently with AI growth, and the mental competition between speed of deployment, market penetration, and valuation creates a compelling comparison for investors. Microstats and scenario contrasts make the comparison even clearer. If AI data center demand doubles this year, one stock could leapfrog the other in adoption, changing the competitive landscape quickly. Both stocks are fundamentally tied to real-world AI applications, not abstract narratives, which increases their long-term credibility for investors looking for under-the-radar opportunities under $1. In summary, Iveda Solutions Inc., IVDA, at 30 cents and Ares Technology Inc., ART, at 42 cents represent two of the most intriguing penny stocks in AI infrastructure right now. Both operate in essential niches, have low valuations, and are quietly positioning themselves for the expansion of AI adoption across real-world systems. For investors focused on sub-$1 AI stocks with real operational impact, these two deserve serious attention. This discussion is for educational purposes only and not financial advice. The goal is to provide a clear understanding of how smaller AI infrastructure players operate and how they fit into the broader expansion of artificial intelligence across industries. We're looking at companies whose technologies are actively solving real-world problems, powering AI systems in ways that often go unnoticed by most retail investors. By examining these businesses, we can see how innovation scales from the ground up, how their operational strategies and partnerships influence adoption, and why their valuations remain relatively low despite playing critical roles in AI deployment. This isn't about making speculative bets or assuming guaranteed financial outcomes, but about building knowledge of the quieter layers of AI infrastructure. Understanding these dynamics gives investors insight into the emerging trends shaping AI adoption, highlights potential growth areas, and encourages a more informed perspective on the market beyond the headline-grabbing tech giants.